a real estate investor, a mortgage broker, a property manager, and as you can see with his background, he does have the longest running real estate show in the nation. So he definitely knows his stuff. We're really, really excited that you agreed to do this overview for us. We do have some guests here. Lisa is a guest. Do we have any other guests? Johnny, this is her first time. She's a new business owner. And then she has a guest coming on as well. I guess she's just running a little bit late. But yeah, so for the rest of us, we're still learning as well as business owners, because this isn't a division that I am super familiar with. More from a consumer side, I am, just because I sat in on some of Eric's presentations, but he does an awesome presentation. And we're going to let him take over and run through this for us. And then Lisa's actually evaluating. She did see the business plan. She's a real estate agent herself, and she thought this could be something maybe that would be valuable to add into what she already does. So I'm happy to have you here, Lisa. Thank you for joining us. And then, so we'll let Eric go through the presentation and definitely be jotting down questions. I'm sure you're gonna have questions along the way, and then he'll open it up for questions at the end. So take it away, Eric. Thank you.
Cool. Well, thank you. Thank you for the nice introduction. And you know, all of us, I think the one thing that we have in common is that we're business owners. And one of the things that I try to emphasize, in fact, the other meeting that I just jumped off, and I have to tell you, I love this technology thing. This is my third time today that I'm presenting this excellent product, the Debt Shredder, and I haven't left the house, which I think is really cool. And so I was just with Don and another group of people, because on Thursday nights I host what I call the big round table, and it's just a group of business people. They happen to mostly also own real estate, which is, of course, you know, near and dear to my heart. But one of the challenges that I always have is to emphasize to people who buy real estate, whether it's their own home, but more importantly, when they buy rental properties, that real estate is a business also. And if you treat it like a business, it'll pay you like a business. If you treat it like a hobby, well, we all know how well hobbies pay. Now, what I'm going to talk about, and I guess, do I have the ability to share my screen?
Yes, you do. And also, before you get started, my sister, Tori Jones, is also on. She's also evaluating. Her daughter is a business partner. Her mother-in-law, Celeste, is a business partner. But Tori has been looking at our business for years. And she's trying to find her niche. And she is passionate about debt reduction and helping people in that area. So I just wanted to mention and introduce.
Well, then
Tori.
I think you're gonna learn a lot from tonight's presentation, and I think you're going to maybe see things, particularly debt, in a new way. Mm-hmm. So is everyone able to see my screen here?
Yes.
All right, so then let's hit it from the top. So Shop Financial, for those of you who are evaluating the business, is one of the divisions. As Jack was telling me, it's considered like one of the universities. You know, there's a number of different areas that we can focus in, and which is one of the reasons why I really love this company, because we come from different angles, so to speak. You know, real business is business. You know, we're all in business for two reasons. Number one is because we're passionate about something that we feel that we can deliver with some added value, a little bit better. We add our taste, we add our style, we add our touch, and most importantly, we add the fact that we're in service of other people. And one of the divisions is called Shop Financial. So in addition to the other areas, there's one area which I personally identify with, which is the real estate and finance and anything to do with real estate. You'll see that I'm a very vertical person when it comes to that. And the concept of getting out of debt, and it was I always used to kid around being a mortgage broker for 20 years, that it's ironic that I put people in debt, but I counsel them how to get out of debt. And because debt is really a vehicle, it's a tool for us to be able to buy more things, leverage ourselves into wealth, and sort of speed up the process. And there's nothing better out there than real estate coupled with a good business to do that. So this product here that I'm going to talk about today is called the Debt Shredder, which is aptly named. Now, all of us, regardless of whether you're in business or not, when, as we're growing up, we have dreams, we have hopes, we have goals, all these things that we want to accomplish in life, whether it be, way out there, playing golf or having an exotic trip somewhere, whether it's owning a nice car, whether it's having a second home, whether it's paying for our college, maybe paying off our college, or whether it be providing college for our kids or even maybe grandkids. We all want to be able to take vacations and enjoy the nice things in life. And of course, this is in reverse order. We eventually want to find, our match, our soulmate, get married, have a family, own a home, and all of these things. Now, what's interesting is that if you look at all of these things, the American dream that we're all fed, is all of these goals tend to put us into debt. And in reality, this is how life takes shape for most people, if you think about it. We go to school, we go to college, we graduate college, and when we graduate college, the first thing is that we get a job. And if we're blessed enough to not have had to borrow money for school and have college debt, there's going to be some kind of other debt, car debt, and all these other things. And what you start to find out, and how most people, they look more at what can I afford? Can I afford the monthly payments versus what is the cost or the price of what we're buying? And it gets worse than that, actually. But we go to college, we graduate, we get married. What happens when you get married? You have babies. When you have babies, you have more expenses. And as you can see, just as we think that our salary and our promotions are catching up, then we go out and buy our house, and all of our debts start to take away. And we're now on this sort of proverbial treadmill of what can I afford? And as long as I can afford, I'm still quote unquote comfortable. But the fact of the matter is that we're in a society today that encourages us and even lures us into, keeping up with the Jones and having nice things. Again, that whole list that I just went through, going through college. Hopefully I could pay for it in college, but a lot of people aren't. In fact, today, I think the number one obstacle for millennials buying a home, you hear about it in the news all the time, is the problem that they're saddled with too much college debt. Student loans are a problem right now. And then when you add on, the fact if they can get a home, but the housing payment, the nice car story, all of a sudden we go from having these wonderful dreams that we build up as we grow up into now we're trying to run on this treadmill, and our dreams and goals are replaced by consumer debt and the cost of living and keeping up with that. So what ends up happening, as I mentioned before, we budget for the monthly payment. If we're even thinking, because many people don't think about the fact that they bought a $50,000 car, they're worried, was I able to get the payments under $500 or $600 a month? And here we go. We start budgeting, but we forget not only what is the actual price that we paid for those things, but we don't understand what the true cost of things are, because we don't think about all of the interest that we're paying out. And the interest benefits you in no way other than giving you access. But imagine if we could keep all of that interest. So the bottom line is that we're in a debt-fueled economy. And if you look at these, and these are actually very conservative. Being in the mortgage business, I see these numbers all the time. And you have the average credit card debt. I just saw updated numbers is more like 18,000 versus 16,000. The average mortgage debt, if you think about it, the median home price this year, and I talk about this on my radio show, right now nationally is about $278,000. Here in Florida, where I live, the median home, that means half of the homes sell for less, but half of these sell for more than $300,000 here in Florida. So if you think that most people put down 10, if a few lucky people put down 20%, you're talking about 240 to $270,000 in the average mortgage debt going forward. But so far, it's still clocking in at around 180,000. Average student loan. You see that when you add all those together, a lot of these things can really add up and burden. Now, the biggest burden of all, of course, is the mortgage. The mortgage, which typically, especially first time around the block, people will take a 30-year mortgage. And 4.5%, which is a decent interest rate. In fact, for my entire career, if I could get a 6% or better, I was thrilled. Now the new modern generation now is spoiled, thinking that interest rates should be at least 3% or less. But here's the calculation: $200,000, which is a modest mortgage at 4.5%, is a payment of $1,013 per month. That's just the principal and interest payment of an amortizing loan. That does not include taxes. That does not include insurance. If you're in an HOA, it doesn't include that as well. That's just $1,013 just to borrow $200,000 on a mortgage. Now, 4.5% still sounds like a very good interest rate, but if you really step back and get past the marketing of the low interest rate and you look at what's really happening, the banks have structured an amortizing mortgage, which is a formula that which the banks have come up with in order to pay off a mortgage over the course of 30 years. But most people don't fully understand that in an amortizing mortgage, in the first year that you pay the mortgage, the payment is almost all interest. It's mostly interest. You've heard that. And so after a full year of paying $12,000, $1,013 times 12, you pay $12,000 at the end of year one. You've only paid $3,000 that went to principal. $9,000 of it, or 73% of your payment at 4.5%, went to pay interest. So we hear 4.5% in interest, but look at what the composition is of the payment. I actually paid 73% interest in my payment. And so maybe it gets better in year two. Well, in year two, because I paid down a little bit of the principal, the way the formula works, I pay interest on the principal. But the principal only went down $3,000, so I'm still paying on $197,000. So at the end of another year of fixed payments of $12,000, I now have gotten down to $8,700 in interest and only $3,400 in principal. So after 2 years of $24,000, I've only paid off about $6,500. Think about that just for a second, and you start to understand that, yes, I'm being charged at 4.5%, but that's not what I'm paying. Fast forward 20 years from now, many people don't understand that on an amortizing loan, when do you hit the 50% mark? It's not in year 15. It's not until year 20 or 21 that I hit the halfway, or in other words, that my $200,000 mortgage goes down to 100. So after 20 years of paying $1,013, I will have paid $243,000 in total payments. However, I still owe 197, or basically half of my mortgage. I still owe it. I've paid $243,000. In other words, I paid 120%, or else I bought the bank a house for them, and I haven't even paid for mine yet, if you think about it in real terms. After 30 years, I will have paid $365,000 in total payments, of which 200,000 was interest, $165,000 was for the bank. In other words, again, I bought the bank a house. Every time I buy a house, I have to buy the bank a house. Not so happy about that, are you? So here's something very interesting, and I've seen this and I watch this kind of thing as I evaluate and pre-qualify people for mortgages, and I look at people's financial plans. The average household does, in fact, out of every dollar that they pay on interest, and by the way, if you have a picture of the attendees, you can drag and move that around so that you can see the pictures of what's going on the screen. But it's true that you pay, and this is before taxes, by the way, you pay 34.5 cents out of every dollar most Americans are spending on debt, on their debt payments or on the interest. So most people could be living the lives that they've always dreamed of if they understood and were able to control the effects of debt. Now, most people say, well, what choice do I have? That's the amortization schedule. I get a statement that says that those are my payments, and what could I do? So the question that you want to have now is, well, what if you could stop paying 3/4 of the payment to the mortgage company? If you could stop overpaying the interest on your debt, would your life be different? Which also begs the question is, why do most people fail to reach their financial goals in life? There's a very common statistic that says that by age 65, most Americans are either dead or dead broke. That only 5% of the people are financially well off, and only 1% of the population, that you've heard about the 1%, that only 1% are financially wealthy. So when it comes to making wise decisions, why do people not make those decisions? Well, the problem is most of us in life is that we're generally comfortable enough, right? I can make the payments, that they're busy enough that they don't stop and evaluate what's going on. In fact, most people also might not even either want to have the math skills or don't have the math skills to figure all this out. So when it comes to making these decisions, we generally take the easiest path, not the best path. So little survey here with everyone who's on the call. Think about this on a scale of 1 to 5, 1 being you just opened my eyes and I didn't realize that I was wasting that much money on interest. I absolutely want to be out of debt. I want to be debt free. Show me how. Versus on the scale of 1 to 5, 5, no, I love debt. I love financial stress. Who needs the money anyway? And obviously nobody that is taking their time out late at night watching an educational presentation would say number 5. So what are most people's options when you come to that realization? Do I want to pay the minimum payment? I gotta be a better way. Do I refinance or do debt consolidation? Well, as a professional in this business, I'll tell you, refinance may be a step to take, and that's something that has to be evaluated where you're at, what you have, but it's not always necessary. And debt consolidation, I always worry about. In fact, a lot of people are enticed to go into debt consolidation where they send their money to a debt consolidation company and they make selected payments, which may or may not include the minimum payments to some of their debtors. Yes, it will get the debt collection people off your back, but it may have some very adverse effects on your credit. So be very careful about debt consolidation. Biweekly payments, they were all the rage back in the 80s, and there were a number of programs out there that showed you how to pay, take your payment and pay half of it every 2 weeks. That's what a biweekly mortgage is. And what people don't realize is, number one, is that if I make half a payment every 2 weeks, well, there's 52 weeks in the year. That means that there's 26 half-week payments, And that means that there's 13 full payments. You're actually just making one extra payment a year. That's the biweekly payment concept in a nutshell. So do you have to pay a service for them to show you how to pay half your mortgage payment every 2 weeks? The answer is yes and no. The answer is not really, because it's pretty simple and straightforward. But on the other hand, it's kind of like going to the gym, right? How many of us go to the gym on a very regular basis? How many people who have memberships go to a gym on a regular basis? You know that the health clubs, they sell like 5 or 10 times the amount of their capacity, because they know that most people buy the membership as a comfort tool. Like I joined the gym. I'll get there one day, but unless you have a personal trainer, and if you have a personal trainer, I guarantee you're going to the gym. A, because you're paying the personal trainer. Two, is because if you're there, 5 minutes late, he's on the phone going, "Hey, Gina, you have an appointment right now at 3:00. Where are you?" And so the biweekly payments, they work better when somebody is your coach there. What is another option? Go out there, make more money and pay more money. But that is a slow option at best. And I'll tell you that, from personal experience and also from watching a lot of other people, send extra money to principal. How many of you, if you wait till the end of the month to see what's left over to send to the mortgage company, are going to have money left over? For some reason, unless you pay yourself first and you make it a point, that's not going to be a good strategy. Now, there's other strategies that are out there, and I'm going to tell you why they're interesting. And it's not that they don't work, because actually they're better than nothing, but they're nowhere near as good as what I'm going to show you tonight. The debt snowball, for example, is where you take all of your debts and you take your smallest debt and you pay that off first. And now you apply that minimum payment that you were paying to the smallest one and add it to the next smallest one. And so now you start to pick up speed and pay up. And then you pay the next smallest one. Once you pay that one off, and it comes fairly quickly when you're adding more money. And then you have this snowball effect of getting faster and faster. But I would like this, instead of starting slow and picking up speed, I want to get right into it. So there's this other concept called the debt avalanche. And the debt avalanche says, let's find the debt with the highest interest rate. Because think of debt and interest rate is like swimming up a stream, and the interest rate is the current. The higher the current, the harder it is to swim upstream. But what a lot of people don't understand is that your minimum payment on your credit cards is often not related to what your interest rate is. The minimum payment will definitely cover your interest, but some credit cards require, because of how they want to structure their payback, you may have a higher minimum payment on one credit card versus another, which then counteracts what you're doing with the debt avalanche. When I was in the mortgage business, I used to really spend a lot of time trying to show people how to pay off their mortgages and all of their debt faster. I used to come up with complex spreadsheets, which I'm pretty good at, and show people. My favorite method was something that I used to call the highest cost per thousand, where I would look at the debt, look at the payment, regardless of the interest rate, but I wanted to see which of my debts had the highest payment per thousand that I owed, and then attack those, because that's sort of like a smarter blend between the snowball and the avalanche. Could try to do this thing, and I had, over the years, my spreadsheet would get more and more complex, which is great for me because I study and live and breathe this stuff. But what if I tell my next door neighbor and I said, "Hey, here's this complex spreadsheet"? They're going to go like, I don't really understand even what you're saying. And if you expect me to fill out or follow that spreadsheet, I'll just go back to what's convenient, and, it's not for me. What if, like what we do when we get in our car nowadays? I grew up where they had maps, they had foldable maps, they had the book maps, they had, or people would write down the directions and you would follow, and, God forbid you made a wrong turn. Today, people don't even know what that means. They have either on their phones, they have it built into their cars, they have a GPS, and you type in the address of where you're going, and it automatically tells you exactly where you're going, the fastest way in the shortest amount of time, and even how to avoid traffic. And even if you have a change where you have to drop off and do a little errand on the way, it will, as soon as it'll keep telling you, well, from where you are now, this is the best way to get back on track. Or, okay, you stopped over here, this is the best way to get back on track. Whether you make a wrong turn or you make sudden changes, the GPS will always self-correct. And until now, there was nothing out there that was doing that for people's financial plan. What this product will do, not even your financial planner can do. In fact, what's very interesting, this is the only what I call a financial GPS that exists on the marketplace today. The creators of this product, the Debt Shredder, have been featured in lots of different places. They've been in Success Magazine, they've been in Home Business, they've been in Inc. Magazine, they've been in Mortgage Plan. In fact, every publication in the real estate and mortgage business has featured the Debt Shredder at some point in time. And these are just a few that you'll see right here. What this is not, and this is what's just as important, is that this is not a refinance. If you've ever had to try or ever tried to refinance a house, you know, I call it a financialoscopy. You have to present your bank statements, your credit card statements, your tax returns, your pay stubs, and to see whether you'll qualify. And ever since the real estate bubble of 2008, banks are a lot more picky about who they'll take. They've been cherry picking, which by the way is good, because that's why we're not going to have another bubble, because most of the mortgages that are out there today are pretty solidly underwritten. It's not a mortgage modification, because if you're in this business, you would know that a mortgage modification is all the same process. You have to provide tax returns, you have to provide bank statements, you have to provide a hardship letter and prove why the bank should modify your loan. And they don't often approve those because they already have you under contract. So this is not that. Doesn't matter what your credit score is. I don't care what your income is. If you can afford to make your payments today without being delinquent, then this program will show you, without changing any change to your lifestyle, you don't have to go through the expense of a lender change, of a refinance. This is not a debt consolidation, not a debt roll down, and this will not increase your payment. This is what's pretty cool about this. What this is very complex software that takes all of the algorithms of all the different types of loans, whether it be a mortgage, which is an amortizing loan and compound interest, whether it be your car loan, which is simple interest, whether it be your credit cards, which is revolving interest. And you're thinking, Eric, I don't know what all of that stuff is. You don't have to know any of this stuff. All you have to do is know how to type numbers into your keyboard and answer a couple questions. This is, in my opinion, and I've seen a lot over my 20 plus years in the mortgage business, my 30 plus years in the real estate business, this is in fact the smart way to save money, reduce debt faster than any other way, and build cash reserves as well. And this is the best way to accumulate wealth. And I want to show you how and what I mean. What the Debt Shredder is, it's a very complex online web-based, that means it's in the clouds. What you access every day when you log into this, or on the days that you don't even have to do this, you do this a couple times a month maybe. But when you log in, you're logging into the most up-to-date, corrected, advanced version of the program. You're not paying annual fees to buy updates. This is web-based, and it's a debt elimination system like no other. It uses proven bank strategies. And yes, the results, when you see these, by the way, they are guaranteed. If you do what the Debt Shredder says to do, you will get, because these are mathematical, numerical, factual computations. They're pretty complex, like I said. This has gone way beyond my complex spreadsheets. And it's the only interactive, and that's important. That means, number one, is that if I make a wrong turn, if I overspend, if I do anything, and I just keep the Debt Shredder up to date on what I did, it will self-correct and tell me how to get back on track. Even better is that it allows me to do what-if situations. Like I'm on track. I'm doing all the things. I'm doing everything right. And I've always wanted to get a boat. And there's a really good deal on a boat right now. I don't know. What should I do? How do I know if I should do it or if I can do it or, what's the real cost? And so I can plug in a what if and says, well, if I took on this boat with an extra $300 a month payment, what will it do to extend how long it'll take for me to pay off the debt? What is the real cost in not only payments, but in interest over the life? The debt shredder will tell you that in real numbers. In fact, what's really even cool, and I've had a number of people that said to me, Eric, your program right here did what my financial planner couldn't do. And that is tell me, when can I actually retire with no debt? Because I'm going to show you in a second the dashboard, and it literally gives me not just the number of years and months that I have left, but it gives me the date. And what you'll find, it becomes kind of a game. I don't know if some of you like to play games with yourself, trying to make yourself better or do better. And when you see that date, you start to look at, I got this tax refund money. I wonder what happens if I put the tax refund into my debt shredder. What will it tell me to do? And how much will it maybe take off time for me to pay it off? So that's why being interactive is very important. And so it will adjust in real time as your situations change. You get a pay raise. Guess what? You put that into the debt shredder. It'll actually show you that you could be debt free even sooner. So when you log into the debt shredder, you have this dashboard that you see right here. And after I put in, I owe this much on a mortgage, this much on car loans, this much on credit card, this much on personal or personal lines of credit, whatever it is. And P.S., if I have a personal loan to my grandfather, I can put that in there. It doesn't matter who the debt is to, and it doesn't matter what kind of debt. It knows how to handle it. It's very robust. But here it's telling me, and this is just one snapshot, this person owes $68,000 in interest remaining. They're 9.3 years from paying off. The amount of interest that they're saving is greater than the amount that they have to pay. This will track your spending and control your budget with reports that are built in here, shows your net worth as you're going along, gives you your time frame, like I said, and on another dashboard, it's going to actually give me the date, the month and the year that I'm going to be paid off. So here's an example. This is Steve. This actually was a real client whose name has been, blurred out to protect the innocent. And he owed $192,000 when he came in to speak with one of our folks here with Debt Shredder. He owed $168,000. You'll see here on the right side, $168,000 on a mortgage at 5.5%. His monthly payment was $1,270. He owed $8,899 on a car loan. Not bad. He was getting along pretty well. 7%, good rate for a car loan. He owed on a student loan, only had $7,400 left there, and he had two credit cards for $4,300 and $3,900 for a total of the $192,000 there. You'll see that he has a 5.5%. The debt shredder is telling you that. Your total debt payments are $2,141. That's it. We're not changing anything. We're just going to change how and when you make those payments. So it gives you this amortization schedule. The debt shredder does this for you. And it says today, I start out at $192,000 doing the traditional pay as you agreed method, or with the debt shredder, you start out, the debt is in blue and then it turns into green. Why does it turn green? Because using the debt shredder, this client here is going to pay off their mortgage in 7 years. Just over 7 years. You see it goes down to $200, and then you see that it turns green. Well, why did it turn green? Well, I have that $2,141 that I was paying. What am I going to do with that? Am I going to go out and spend it and splurge? Everybody say, no, that's not what I'm going to do. I'm going to put it into a savings account. And what if you were disciplined enough to put it into a savings account at just 1%. Now, a little disclaimer, because I have this issue. I don't get out of bed for 1%. Investing in the real estate business, I can 10x that number in terms of my return. So what I'm talking about would be 10 times greater, but they use 1% for compliance reasons. And PS, if you saw my 10x number, you wouldn't even believe the number, because if you start looking at it, if I pay this as agreed, at the end of 30 years, and I gotta now move this picture out of the way again so I can see it, and because you're probably looking at my same screen. At the end of 28.8 years, they had just gotten this mortgage a year and a half ago or 1.2 years ago. So in 28.8 years, they will have paid off everything, and their $200,000, let's say, house is now free and clear. And PS, a house doubles in value roughly every 10 years. So the 200 would be 400, would be 800, could be close to $1 million in 30 years. And they'll have a free and clear asset of $1 million. If they did the debt shredder method, then what would happen is that after 7 years, they would be free and clear. At only 1%, that money that they otherwise would be paying to the bank is now being paid to me. And now I have $780,000 of cash in the bank, plus my $1 million free and clear house. So I love this quote here. Those who don't understand interest are doomed to pay it next 28.8 years. Those who do understand it are destined to earn it. And that's the big, big difference. Another one of the reports, and the debt shredder provides all of this, that you can look at this every day, anytime that you want to. I took my mortgage, my car loan, my student loan, my 2 credit cards, only 5 debts here, but I'm debt free here now in 7.1 years. Remember I told you, it's actually telling me that on February 2025, I'm going to be debt free. I'll be making 0 debt payments for the next 29 years instead. You know, the red is status quo or pay as agreed, versus $785,000 in the bank with the debt shredder. We'll use your 21.8 years of saved payments. See here, the blue goes down and the green goes up. That's almost 22 years of saved payments. That's your savings with only a 1% return. Imagine what the savings are at twice that, 3 times that. You do the math, but the bottom line here is what I can tell you is that I saved $131,000 in interest payments that I would have given, and given is true because it's voluntary. If I showed you a way that you didn't have to give that money, why would you? The average over the life of this period here means that I'm saving an average of $1,500 per month, not paying that to the bank. So the debt shredder with little or no alteration. Remember, I didn't say, you know, if you add X dollars, all I'm doing is I'm going to re-educate which debts to pay first and when to pay them. There's no refinancing required. Sometimes I'll look at it and I'll tell you that a refinance will help you. Necessary, let the software direct you to 0 debt. Don't try to second guess it. Don't jimmy it. You know, it's one of those things, you know, you don't lie to the software because you know the truth. We use some very advanced strategies, and you might have heard of the biweekly mortgage. You might have heard about some of the debt avalanche or the debt snowball, but most people haven't heard of, much less understand how you use this concept of interest cancellation. And interest cancellation means that it's possible I can pay back a fraction of the actual interest that's normally owed. For an example, this is some people, what we'll do is that they'll take their mortgage payment and they'll look at their amortization schedule and look at next month's principal payment, a small amount, and add it to their current payment. And what that does is it cancels the interest on the next payment. And so the debt shredder knows when to do that with what kind of debts that there are. So strategic payoff analyzes your situation, your type of debts, and determines which one is the best path, which payment to pay, and how much. Plus, you've all heard of the time value of money. That is a very complex formula that tells you what is the value of money today. What would that be worth in future dollars with inflation, or what would that future amount be worth in today's dollar? And you'll see some cool time value of money calculations built into the software. So when you get the debt shredder, it's one software. You log in, you update what you're doing. It comes with coaching. It comes with coaching from the company. There's a dedicated phone number that if you ever have questions, how should I characterize this or add this? I'm having problems. You have a number that you can always call. I always provide backup coaching for all of the folks. And in fact, I talk about this program on my radio show on a regular basis. Also inside the dashboard, there's education and other videos and tutorials that teach you more about finances and financial planning. And so what the software does, very simple. If you were to picture what your checkbook register looks like, the one that the bank gives you that nobody uses, that's what you'll see on this computer screen. It just says, okay, how much did you spend? You put in the numbers that you spend. How much did you make? You put in the numbers that you make, and it automatically does the calculation. And then it'll tell you what's the exact dollar amount, when to move it, the exact date. So it's funky. It'll say, take $5,000 from this account and then make a payment on that account, or park it in this account because it knows, it understands the different loans. And you all have heard of the float, the bank, you pay a bill, the bank takes the money out of your account, but it doesn't pay the other people for several days, sometimes a week. And there's, a lot of people use the float. Well, there's a float built into a lot of your debt. And so it may actually put money from your checking account, or it might even take money from a credit card account because you're in the grace period, and say, go ahead and pay off your mortgage, which is compounding interest. And it constantly adjusts that. And while it adjusts constantly to your real life world situations, you're paying off your mortgage, you're paying off your loans, you're paying off your debt faster than any other. There's no other method that's faster than this. This is a really neat little report. And it shows, and this is that same client, instead of paying $365,000 in total debt payments, Steve is going to pay $231,000, a savings of $131,000. That's real cash in your pocket or in your bank account. Is money that never leaves your account. It's the salary that goes in but never goes to the bank. $169,000 gets paid off. That's 3.3 years worth of your entire income of $4,000. This is used because once you put the money into the debt shredder, you'll put in what your income is, what your expenses are, and it's figuring out, there you go. There's 3.5 years of your income saved. Total interest, and that's an interest. Again, $131,000, 21.8 years. And look at the difference, the savings. And the dashboard always summarizes it in plain and simple numbers. Each month that you delay getting started, and I'm talking to every single person on this call. If you had Steve's numbers, every month that you waited, you would pay $1,500 that at that point, once you pay it, you can't get it back. So waiting only costs money because that is the cost of money, right? So it doesn't just stop helping you get out of debt. It helps demonstrate the earning potential. That's that $785,000 that you've saved by paying down the debt fast. Cost, the real cost of borrowing money, and how much you could be potentially losing each and every month. And so normally at this point, we're doing this in a group setting here, but normally at this point, what I would do is I would offer a free analysis. And by the way, I am offering a free analysis to anybody, no strings attached, no obligation. if you would like to find out how this would look in your situation, just get back with the person who invited you here. I'm going to make available my input form that is a simple, one and a half page form where you fill out how much you make, what is your overhead per month, and then what are your debts. And you would get this exact same report that you're seeing that for the last few slides, illustrating how much money you could save. Now, having done this more than a few times, I will tell you that if you have more than $20,000 in debt, this will save you money. When it gets less than $20,000, it may be, it's iffy depending on what kind of debt, what interest rate, and so forth, whether it's the right thing for you. But I'll tell you that if you owe, which by the way is usually a car loan, it's easily student loans, it's every single mortgage that exists in the in the world. But again, it's worth at least knowing what it has. So like I said, talk to the person who invited you here. I'm going to make it accessible, and I'll give them, a template copy that you can, hold on to, save, and use, and then I'll get it back to that person so that either on a one-on-one basis we can go over it if there's any explanations to be had. But the bottom line here on the purpose of this university session here was to educate you on what's available here. And I'll tell you that for anybody that owns real estate or plans to own real estate, the neat thing about the software, it's a lifetime membership to the software access. It is transferable. It is willable. It is reusable. If I pay off a mortgage, for me, for example, as a real estate investor, and I have a number of mortgages, because I have all that rent that flows through, this thing, it's not uncommon for the regular person for me to show you how to pay off your 30-year mortgage in less than 10 years. Think about that. I saved 20 years on a mortgage. It's enormous. If you're a real estate investor and you have rental property, it's not uncommon for the payoff to be as little as 4 to 5 years. It's that powerful, and the timing of money is that impactful. So at this point, let me open it up to any questions if anybody has.
So Eric, my daughter just bought a house, literally 2 months in at this point. So from a starting point, is this good for them? Like just right out of the gate?
No better time than right out of the gate. The best time is right out of the gate.
All right. Well, we're going to be putting her in touch with you.
Wonderful. Wonderful. Yeah, the sooner that you get started, the savings. Remember what I said in Steve's case, that every month that he would wait, there's a cost, because that's interest that he paid, and it's irretrievable, it's irreversible. So the sooner the better. In fact, just out of the time value of money.
Awesome. Thank you.
More than welcome.
Is that it? Nobody else has any questions?
Yeah, I don't know if you feel free. Anyone who wants to unmute themselves. I'm happy to address any questions. No such thing as a silly question. The world of finance it's stacked in favor of the lenders and the institutions. So I know a lot of this stuff might have seemed technical. That's one of the beautiful things. My landscaper can understand the debt shredder. Anybody can understand the debt shredder. A child that can fill out a form can understand how to do this, and it's very intuitive and very graphically user friendly.
So I have a question, but it might be something that I have to get answered when I do a consultation, because I have student loans, but I don't pay them. They're in, I don't know what the word is, deferment.
They're in deferment right now.
Yeah. So
And
that I I don't have that a part of my monthly payment, even though I do have to pay it. So I'd be curious to see how that would work.
Right. And so what happens, you know, with student loans and, you know, you don't have to disclose in a group setting what they are, how much they are. But the fact of the matter is that you're going to pay them.
Right.
And as I mentioned earlier in the presentation, I will say that the number one obstacle to home ownership of millennials right now is
Right.
student loans. So the sooner that you can tackle, and while it's in deferment, which means that you're not required to pay them, but they certainly will accept the payment, and it's in your best interest to make those payments if you can.
Right. So I guess that's where that's the tricky part. And that's
Yeah.
where I'm like, I don't know how that would work, because for me, it would actually be adding a payment that's to my monthly bills that I don't pay. So,
Understood.
but I can
So
talk about it separately.
So that's why the one-on-one consultation will
Right.
be good, because then I'll be able to ask you some more personal questions.
Yeah.
And then we can plug it in, and the
Mhm.
system, you know, forget, I have a lot of intuitive knowledge of this, but the truth is the debt shredder will tell us. There's a concept called this discretionary income, right?
Right. Mhm.
So that's what's left over after I pay the bills that I have to. And so
Right.
it'll depend a bit on what your discretionary income is after you pay the things you have to pay.
Right. Yeah. Uh-huh. Okay.
That's
Thank
life.
you.
Yeah,
Yeah.
no, you're welcome. That's a very good
Eric,
question. I get that a lot.
how
Eric
about
is,
like if there's a, so Alonzo, go ahead.
I'm sorry, I was just going to ask if there was another webinar for somebody that's looking to become a representative to offer a debt shredder to other people.
Yes. As a matter of fact, every other Monday night, we have a presentation for folks who are guests that want to learn more about it. And then the alternating week, we have training for folks that are going through this process of learning how to present it and sell it.
Okay.
So I was going to ask Eric about for Tori, like if she's not paying her loans now, but if she could use the debt shredder to pay down the debt that she has, and then the money that she would save, you know, because if she paid her debt down sooner, then she might have some discretionary income after paying off some of the debt that she has. And then couldn't she use that towards her loans at that time? You know,
The answer to that question is yes, you know, and that's why, you know, you have to ask some more, you know, one-on-one type questions to kind of get to it. But there's two things, and this goes back to my, you know, my paradox. I am a mortgage broker, and I get loans for people putting them into debt. But I believe that we want to be out of debt, and I firmly believe in helping people get out of debt. The debt that she has right now is going to prevent her from getting other debt that she wants, i.e. a mortgage, right? And so we want to use this to be able to realize the dream of home ownership. And then when you are a homeowner, the next level up is maybe to become a landlord and be able to build up, you know, some assets and some things. And I use the debt shredder to pay off the debts that I have so that I can go out and get more. And the more properties that you have, just think about the, you know, the extra flow of cash. The more cash that rolls through your accounts, the faster your debt gets paid off, which means the more money I get to save and the more money I get to invest.
right.
So I could have a mortgage today, pay it off tomorrow, go out and get another mortgage and just plug that back into the debt shredder because I have it for life.
Right.
I have had some clients that the parents used it to pay off the debt, and then they just helped their daughter to buy their first home, and they transferred the debt shredder to her. And now the daughter is using the debt shredder to become, and I wish when I was 20 years old graduating from college that something like this was even shown to me.
Yeah. So when you purchase the software, then you own it forever.
Correct. And if you want, you're done with it, and you said, I'm out of debt and I'm never going to get any more debt, I can sell it to somebody else. I can give it to somebody else. In most cases, it's usually a family member.
Yeah.
But I kid around, it's willable and transferable.
And this may or may not, you may not know the answer to that. How many times can you transfer it?
I haven't seen them say no. So I think, once you I give you a new username and password, you can change the password as many times as you want. The company doesn't care really who's using it.
Nice.
Wow. Okay, that's really good. Does anybody else have questions, comments, anything, clarifications?
Poems, limericks.
No?
Well, actually, Eric, I do have one other question, and again, this may be more of a technical question. When, I guess, being in the industry, when approaching or working with real estate agents that see a value in this, there's usually, obviously, they're not allowed to sell like an external product other than working for the real estate agency. So
That's actually not true.
really,
Yes. And in fact, this is a great product. I'm a real estate agent licensed. I'm a mortgage broker licensed. And I feel like I am not doing my service if I don't bring this up to my clients. Picture you buying your first home, and you're all excited that you've got your dream, your first step in the American dream. And I said, how would you like to see a way where you could pay off this house without changing your lifestyle any in 10 years?
okay, so I must be confusing then. Maybe it's the insurance agencies and those that in that realm that they're not permitted to sell something else.
Here's where I'll tell you, because these are all great real life questions. Real estate agents love this product, and it's an additional stream of income. So it's a good stream of income for a good service provided. Number one, real estate agents can sell this. Mortgage brokers, same story. It's a legitimately beneficial service, additional stream of income. Insurance agents, particularly life insurance and those type of, same thing. This is right in line with helping them with financial planning. So even stockbrokers, if they understand this, because think about it, if I'm providing Steve a savings of about $1,500 extra a month in savings, what can he do with it? Will Steve's broker tell him to invest it at 1%? Steve's broker, in addition to being able, now his company, because some insurance companies are funny about compliance and what they can sell. So they're a gray area because it depends on their company. But it is definitely in the vein of helping the financial plan. Remember, I told you, I have more than once, what prompted somebody to buy the debt shredder is I have been searching for a financial planner or somebody to tell me, when can I actually retire? When will I actually be debt? Well, if you do this, you do that, you should get there. This is the first piece of software that says that if you do this, you will retire on this month in this year. And so this is a great thing. In one case, one of my favorite cases is a gentleman who's doing the right thing. He's got some rental properties. He has a good job. He saves good money, but he has a special needs child, an adult special needs child now. And his biggest concern right now is, when will I be done When will I have everything paid off so I can make sure that I financially set up my special needs adult child for the rest of his life? When he saw this, end of story. It wouldn't have mattered, what this cost was, if it was a one-time or a multiple, because it brought him such clarity, and it was great. Now, where I have seen what you're talking about in terms of the reluctance to sell it is, for example, CPAs. Accountants are very, they have an ethical code that they're supposed to be unbiased. So when they recommend something, they don't want to, they're morally not supposed to get paid for that additional advice. So what does the CPA do? He says, here, this product, the Debt Shredder, is a good product, and I recommend, that you take a look at it. So I want you to sit down with Eric, and whereas I will pay a referral fee to an insurance agent, a mortgage broker, a real estate agent, gladly, if they want to help and introduce me to customers. The accountant, on the other hand, says, listen, Eric, don't pay me, which reluctantly I'll do. I won't pay him. But the truth of the matter is that, I wish more people would tell more people about this, because honestly, that if the more debt-free this country would be, the stronger this country would be. And the better off everybody would be.
Yeah. Thank you, Eric. This was awesome.
Thank you.
I'm always glad to see you, and thankful for your time as always. Where can we find out more information about the training and about the Monday night sessions?
They're always at 9 p.m.
Okay.
Drop me an email or message, and I will tell you. I'm trying to remember. I think this last Monday was the guests, in other words, an open night. So this coming Monday night will be an agent's, a representative's night.
Okay.
And from there forward, but I'll get you, and I'll put you in contact with who you need to know to get that training and so forth.
Okay. Perfect. Okay. Does anybody else have any questions before we go?
Thank you so much.
You're very welcome. Thank you guys for taking the time out of your night. So
Thank you.
my pleasure.
Lisa, I'll see you tomorrow. We'll
Yes.
follow up tomorrow. So thank you for being here. Mama Leslie, did you have anything you wanted to add?
Oh, I just want to say thank you. This was really, really good. I'm going to want to look at talking to you more, getting a free analysis and seeing what my debt is going to look like with this program. So yeah, very interested.
Super. And if I were to give a shameless plug, that the radio show, which is public and it's open to the public, it's always educational about real estate and investing. It's on Monday through Friday at 5 p.m. Eastern time. It's on 3 radio stations here in South Florida, but the easiest way, for those of you who are familiar with iHeartRadio, you go on iHeartRadio and just look up WWNN 1470. You can listen to my show live on iHeartRadio, no matter where you live in the country. And also I have a website called Automatic Landlord, because I coach and consult landlords on how to own properties without hassle, how to make money and not be, go bald in the process.
Yeah.
So it's automaticlandlord.com. At the top of the page, it says radio show. So you can listen live even on the site and on demand. So whenever you want to listen to it, you can go and listen to the archives of all the shows there. And then Sunday nights at 9 o'clock, we have a show marathon where I do the entire week's shows, go back to back, but they're all recordings at 9 o'clock. So take advantage of the free information and the education.
Yeah.
Everything and anything I can do to help you guys out. At the end, this is, I have a very warm place in my heart for entrepreneurs. And whether you're a real estate entrepreneur or whether you're a, that's what the future is all about.
Awesome. Thank you, Eric. I appreciate your time. We all appreciate you pouring into us with all of your knowledge and expertise. Thank you for taking the time out for sure.
Thank you very much.
All right, guys. Thank you. We'll see you again. I'll get that information out to you guys about Monday as well, as soon as I
Thank
get
you.
with Eric. Okay. All
All
right.
right.
Thank
Bye.
you.
Thanks, Eric.